Hi, it's Tip Tuesday, and we're going to do some last minute tax tips for 2019. We're going to talk about Roth contributions and LERP contributions, or Roth conversions or LERP conversions. Kind of a lot to go over today, but we'll try to do it quick and dirty here. Roth IRAs are for people who want to pay taxes now but not pay taxes in the future. Many people are in an income bracket where they say, but I can't contribute to a Roth anymore. Guess what? You can. Roth IRAs actually phase out if you're single between the 122 modified adjusted gross income bracket. I'll explain that in another video. Or between 193 and $203,000 for a married couple filing jointly. If you make more than that on a modified adjusted gross income level, then you're forbidden to contribute to a Roth IRA. But guess what? Here's how you do it. We call it the backdoor Roth. The backdoor Roth is where you add money to a non-deductible IRA, which based on those incomes, you can add to a regular IRA, but you don't get a deduction. Oh, and you can't do a Roth. Well, here's the interesting thing about that, is there is no income cap or income rule or income level where you cannot convert or convert from a regular IRA, a non-deductible IRA, to a Roth IRA. So if you can, hurry up, make that contribution. Maybe it's $6,000, $7,000 if you're married and older than 55 or 50 years old, so you have the makeup provision and you want to do a spousal contribution, etc. You have up to $7,000 potentially that you can put into a non-deductible IRA and then right away convert it to a Roth. Bingo! You just got a Roth IRA contribution of $7,000 that you thought you couldn't do because you thought your income was too high. Now, I talked about a LERP being something also that you could do. Well, what if you don't want to do a Roth IRA? Maybe you're maxing out your 401k contributions. Maybe you've already did this IRA, backdoor IRA, where you took the non-deductible IRA, converted to a Roth, but you still want to put money away so that it can grow tax-free. You're willing to pay taxes now while the taxes are on sale. We know the recent tax cuts that went into effect in 2008 are going to sunset for sure by 2026. And right now, all the tax brackets are lower than they will be later, probably when you retire and need that money. It's always good to pay taxes at the lowest rate possible, not so much a matter of when. It matters at the rate that you pay. So if you can pay lower rate now rather than a higher rate later in retirement or when the tax brackets return to their old levels, it's better to pay now. So where can you put that extra money that you wish you could have contributed to the 401k or that you wish you could have contributed to your Roth IRA that you can't do? And we call that a LERP. Life insurance has similar tax-free benefits than a Roth IRA. You put the money in, it grows in a bucket tax-free, and you can take the money out tax-free. Oh, and when you die, whatever's in that bucket goes to your heirs tax-free. But there's one extra thing about that type of a LERP, life insurance retirement plan, that a Roth doesn't have. And that's just a little tiny bit of extra life insurance. If you do end up dying early, well, your spouse or loved ones get a little extra life insurance. Now, I'm not talking about enough life insurance that makes your heirs rich. I'm talking about just enough life insurance so that you can buy this tax-free bucket to put money into. So if you have 10 extra thousand or 20 extra thousand or even 50,000 a year extra because you're making more than you need to live on and you want to put it away for the future, you can really accelerate your retirement plan, and you can do it in a tax-free manner through using a LERP rather than being restricted on the contributions that you can make to a Roth IRA. I think tax-free is the best way to go. If you think tax-free is the best way to go, let's explore the options. Roth conversions, hurry and do them before the end of the year, and also LERP conversions. You can even convert from an IRA if you're over 59 and a half, pay taxes now and never pay tax again. Or instead of contributing the max to your 401k or other tax deductible options right now, contribute to one that you can pay taxes to now, like a Roth, but like a super Roth where you can extend the amount you put in and get an even better return in the future. You know what's cool about the LERP option instead of the Roth IRA option or any other qualified option is you can take the money out at any time rather than waiting till you're 59 and a half. So if you're in the 30s or 40s and you do a LERP plan as an option, you want to retire early, you can access that money earlier, tax-free, and not be restricted to the same rules of a 401k or an IRA. I've thrown a lot at you today, but those are some last minute tax tips for 2019. If you need any help and want to consider getting some numbers, please give us a call or contact us on the web. We'd love to hear from you. Happy holidays and a happy and prosperous new year.